Welcome to the Pro Farmer Podcast, your source for what's impacting prices today and your guide to what will impact markets in the weeks ahead. More substance, less fuss. The Pro Farmer Podcast starts now.
Welcome to the Pro Farmer Podcast, everyone. Davis Michaelson here for you on December 15, 2025. I'm joined by Spencer Langford from Pro Farmer this morning. Spencer, let's talk about Friday's closes because, everything was sort of lower across the board. Talk to me just about the general attitude in the market as we ended last week, buddy.
Yeah, especially in the grains, they're not exactly a very bullish outlook. Uh, I guess I'll kind of start here with corn. Corn has been mostly kind of in this choppy sideways trading range here, really ever since the start of December. Uh, we, it hasn't really been much of a leader in its own right. I think it's really being limited, especially by wheat. That's a substitute grain there. Uh, and we haven't really seen a lot of this, what we would normally consider bullish news, translate into any sort of price rally. Last week, obviously, we saw USDA increase their forecast for corn exports for this marketing year, but that wasn't really fresh news to most people, I think, who had been paying attention to that sales data as it's coming out. It was really just a matter of time of when is USDA going to update those balance sheets to reflect that.
That's an interesting point, and I'll have Lane in the second part of the show here. We're going to talk about those corn exports. He's found some interesting data there, some comparisons, but I think you're exactly right here, Spencer. Corn just doesn't want to take on a leadership role, stuck in range-bound trade, basically. If anything, it's threatening to the downside of that range. Wheat looks like it wants to be a leader every once in a while, and it maybe kind of pops a little bit and then just pulls right back immediately there. Too much wheat around the world, is that the deal?
Yeah, and last week's WASDE definitely didn't help in that regard either. That was probably one of the more larger changes that we saw was the update to global stocks around the world of wheat. Pretty much every producer out there, a major producer of wheat, saw either an increase to their production estimate or it was maintained steady. Uh, that's just really hard to get excited about wheat or find some story where we could see a potential upside for wheat just with how much of it exists. Uh, Especially sometimes we talk about how maybe USDA's number doesn't always match up with what the market expects, but I think this is one case where USDA has really pegged it well. We're seeing around the world all these different governments taking actions that, to me, are basically screaming, we have too much wheat and we're looking to, put it out there in the world and find somebody to buy it. Just to name a few here, Argentina and Russia, they have either cut or completely reduced their export tax on wheat. So they're pretty obviously trying to get some out there.
Putting it on fire sale to get it out there into the market. Well, and the net result from last week, the weekly close on March hard red wheat, down 13 and a quarter cents. The March soft red wheat on the week was down 6.5. The Minneapolis spring wheat was unchanged there, but I don't know if that makes anybody feel any better at all. Let's move over to soybeans, where on Friday, the Jan contract down 6.75, March down 16, July down 14.75. All told, the January beans ended up at 10.76 3/4, off 28.5 on the week. Ouch. Now we've got multiple contracts down with a 10 handle here, Spencer. How do you like the setup?
Yeah, we kept saying, beans don't like the $11 handle.
Yep.
Unfortunately, they decided they like 10 a little better than 12. Uh, I think the big limiting thing here, we always say bull markets need to be fed fresh news. And, soybeans, we saw quite a few days with flash sales to China, which, you would think, oh, this is great news. Markets are going to respond positively to this. However, I really think we've kind of shifted tones here, and the trade deal with China is almost old news, right? We've been talking about that for a while, and I don't think it looks particularly well to kind of see us limping along to meet this 12 million metric ton, right? We've kind of seen the timeline shifted on when they were going to complete those purchases, and then obviously the rare earth metals are a really big geopolitical issue that underpins the larger trade deal and relations between these two countries. So I think there's still a lot of lingering uncertainty of beyond this current marketing year as well.
Well, and I would say, Spencer, as the market goes down, it tends to bring in buyers. That's how low prices cure low prices. However, China has such a footprint in the U.S. soybean export book. I mean, who else would step in and buy here that hasn't already bought soybeans, Spencer?
I think if I really had an answer to that question, and be in a pretty good spot.
Yeah.
You know, China is obviously one of our, or the biggest partner. The only people who could maybe come close would be European Union. Obviously, we align a little bit closer to them on a lot of other issues relating to trade and things like that. And they also are already one of our larger current customers, so it's a little bit easier to maybe shift some of those exports there.
Has the price action here got traders a little bit more focused maybe on the fundamentals on these building supplies that we've got this backlog here of product that just isn't moving out of the country?
Yeah, especially when you talk about right basis, like the cash price that farmers are getting, that can be really, really influenced by this. Especially, earlier this year we talked a lot about the Pacific Northwest and the Dakotas and how uh, right the attitudes around export demand can really influence that. But also, in the futures market, I think it's tough, right, when you see export sales doing as poorly as they are to really get excited. Obviously, we're seeing like record crush come out, right? We just saw the number for October set, not just a record for the month of October, but a record for any month ever in the history that we've tracked it. So there's still some positive outlook on the domestic side of the demand sheet, but uh, I think definitely the lack of exports has people a little bit worried.
Yeah, for sure. And I would argue rightly so. I think you're right on there. Let's move over to the livestocks here. The February fat cattle, a buck 40 lower on Friday at 229.55. Jan feeders $4.30 lower on Friday. But all told, I mean, it was an up week overall, although the Jan, excuse me, the Jan just gained a nickel on the week, and the February fat cattle up $2.40 here. I don't know. I said it more than once last week. It seemed like a little bit, almost like the cattle market is moderating just a little bit. Spencer, what's your take?
Yeah, I think after their late October, we saw a lot of liquidation of contracts. However, I think we are starting to see it, and the cash market is really reflecting this, that people are calming down a little bit now that we've kind of let the air out of the tire a little bit. Pressure is maybe a little bit lighter there. But the cash markets have started actually firm here in the last week or two, which to me that is a really, really good sign, especially for futures. Looking forward, we know that the fundamentals are tight. We have kind of weathered through this news of potential imports of beef in Argentina and Brazil. So I think going forward, we're kind of realizing, hey, those countries importing beef may not necessarily be enough. I think the big thing going forward is going to be what's happening with the border issue in Mexico.
Mm, yeah, yeah, for sure. And then let's just finish up here with hogs. The February lean hogs were up 35. April added 30 cents. That's up to 89.52 and a half. I mean, on the week, hogs look pretty sporty, up $2.25. That's got to be some seasonal strength. Fair?
Totally, that is spot on. It felt like there for 2 months straight, we were looking at the lean hog index and just decrease after decrease after decrease every day. We have really started to turn that around after the Thanksgiving holiday.
Hmm. So, I mean, so if this is a seasonal rally heading up to Christmas, can we expect hogs to kind of fall off a cliff once the holiday buzz is over?
I think we'll go back maybe to a little bit more of that usual uh, usual status of paying more attention to how are hogs moving in relation to cattle. Uh, I think that will maybe come back more into play. And right now we've got generally cautiously optimistic, positive tones in cattle futures. So uh, hopefully hogs would be able to see some gains off of that as well.
Well, cautious or no, I will take any optimism that we can get here, Spencer. Look ahead to the rest of this week here, and then I'll let you go. But anything popping up on your radar? What do you be looking for this week?
Yeah, so we just touched on cattle fundamentals. This Friday, we're going to get an update to the cattle on feed report from USDA. Obviously, that is at the forefront of doing analysis on these cattle markets and just getting a picture of, is supply starting to build back up, or are we going to have to keep waiting? Other than that, I'm also going to be interested to see what our inflation CPI report has to say this week as well.
Excellent. Spencer Langford, we appreciate you swinging through here. Good perspective this morning. Have a great week, buddy.
You too.
All right, that was Spencer Langford from Pro Farmer. Coming up next, we've got Lane Acree. So stick around through this break for more Pro Farmer Podcast.
Hey everyone, Davis Michelson here, and if you're one of the listeners without access to Pro Farmer's daily market reports and policy insights, this message is for you. Right now, you can start a free trial to Pro Farmer, unlocking the same profit-boosting information that farmers have trusted for over 50 years. Sign up online at tryprofarmer.com. No credit card needed. Visit tryprofarmer.com to sign up and get more details and updates on the topics we're discussing today, plus much, much more.
Get the latest markets, weather, and rural news whenever it works for you. Farm Journal TV is on Roku, Fire TV, and mobile. Try it for free for 14 days and take ag with you everywhere.
Welcome back to the Pro Farmer Podcast. Everybody, thanks for tuning in. Davis Michelson here. Lane Acree now joins. Lane, you posted an article asking the question that I don't know if anybody else is asking, really. We're sort of starting to take corn exports for granted, it feels like. You've hit on some really interesting items here. Is USDA's higher corn export estimate warranted? Didn't expect a change in corn stocks. USDA surprised with a big increase to exports from already record levels. The soybean story has been China's absence from the market. They stepped up a little bit in late November, but corn exports have been super strong this whole time. And now it seems like USDA is expecting even more. Give us the high points.
Yeah. So we kind of saw this in 2018 where China was largely absent from the U.S. soy market. We typically book a lot of those soybean cargoes in the first few months of the marketing year, and it actually starts to wind down once the calendar rolls to the new year and basically chips lower. And once it starts chipping lower in beans, the corn exports really start to pick up. Well, we've been talking basically all summer about this robust pace of corn exports, just shipping a lot of corn. And U.S. corn is pretty competitively priced in the world market. It's a high quality crop, and we've got a lot of it. So we've been able to continue that robust pace of shipments into the new marketing year and through harvest. And it seems to be ample supplies again this year. 98 million acres plants a lot of corn, and the lack of demand out of China for beans has left exporters with not much else to do except for to continue loading corn onto boats. Mm-hmm. And that's really helped truly record pace. And we have to look back to 2018 as the last time that we've seen anything like what we've seen already. We've got record total commitments, which is outstanding sales plus accumulated shipments. And the pace that we've seen so far in the accumulated shipments is near record high. It's near that 2018 mark as a proportion of total exports. So we look at USDA's 3.2 billion bushel export estimate and look at how much we've shipped so far, and it's well above where we're at normally. And that could be taken a few different ways. It's either that's going to continue on through the end of the marketing year and we'll probably get more than 3.2 billion bushels, or maybe it tapers off eventually. And where USDA is at now, it's like, yeah, they probably could have increased their export forecast even more, but they're expecting a little bit of a decrease compared to what we usually see towards the latter half of the marketing year. So usually corn exports really take off in the late winter, and into the spring is when we typically ship a lot of those bushels. And I think USDA is kind of thinking, as we are, that soybeans are going to garner a little bit more attention. But even so, as good as corn exports are, soybeans are bad. And again, going back to basically right where we're at 2018 as a proportion of accumulated shipments versus the final year export estimate. And of course, all the historical years we have that final export number. This year we don't. So we're just kind of using where USDA is at as a benchmark. But you also have to remember that in 2018 we exported more soybeans than we have so far this year, and we ended up shipping over 1.7 billion bushels of beans in 2018, 2019, and that's well above where we're at right now at 1.635 billion bushels in USDA's latest forecast. Now we expect exports of beans to be a little bit firmer than that, but if we were to get to where we're at in 2018 and 2019, that soybean balance sheet quickly becomes really untenable. And like Spencer said, crush use has been really robust. That October figure was just remarkable, a record for any month. And typically we see crush peak in December, so we're going to be taking a crack at that October record here in a couple months. And crushing margins remain really good. So that domestic demand doesn't look like it's going to be going anywhere. It has to be priced out of the market, and we're not going to get priced out of the market under $11 in nearby futures.
Yeah. Well, talk to me about the potential there. So it sounds like USDA is anticipating that usual demand push in the late winter into spring in corn exports. Am I hearing that right?
Yeah, they expect the demand to stay pretty much as robust as it has been.
Okay.
I don't think they see the usual push, but we're at shipments wise. We've been pushing for 9 months.
Yeah.
It's like the shipments haven't really slowed. We've had a down week here and there. Like a couple weeks ago, we had a bad export sales report, but then we came back with 2 million metric tons the next week. So it's like the demand's not going anywhere.
Interesting that the same setup appeared in 2018 under the phase one there. And you raised a point in your article here about just sort of the logistical. I mean, as soybean exports have fallen, corn exports have increased, partially because there's room for the boats. Am I reading that right?
Yeah, that's right. I mean, these guys got to be doing something, and if they're pushing corn exports, they're pushing corn exports, and there's a lack of soybean demand that's just going to drive additional logistical bandwidth to help load more corn. And typically we see a lot on rail going to Mexico too, and we've been seeing more boat shipments, and that's a big positive in my mind, just expanding how we're shipping these bushels a little bit.
Yeah. I raised the idea that, under $11, soybeans have got to bring in some buyers, but it's all about China, isn't it, Lane?
Yeah, it sure is. And we did see another daily export sale today. And we've had a fair amount of these daily export sales over the past week. It really dried up in the latter portion of November, but it's picked up here in December. But they've been pretty small. That minimum buy is a 1,000 metric ton mark to hit the daily report, and each day we're 120 to 138. So we're not really pushing the pace, but if we do get to that 12 million metric ton mark by February, it's still not a bad thing. I think USDA is pricing in a lot less than that. If you price in the U.S. taking, I think it was 85% of the share outside of China for soybean exports, we come out at about 1.63 billion bushels, and USDA is at 1.635. So in my mind, USDA is not pricing in a lot of exports to China right now.
Yeah.
So even if we just get 250 million bushels, you're not going to add that on top of the 1.635, but I think we're going to push closer to 1.7 billion bushels, and we got carry out at 290 right now. So there's not a lot of wiggle room.
Yeah.
Like if we're increasing exports by 100 million bushels, I don't think we're cutting 100 million off a crush.
Okay, that makes sense. Well, let me lay out a scenario for you for corn, because as you've rightly pointed out, exports have been super solid for corn, and that continues. we're stuck kind of in this range bound trade. Nobody's really all that excited. I keep hearing people say things like, well, you got to feed the bull every day. Given that we've got good exports already, I feel like that should be exciting enough for the market. Number one, do you feel like we're prepared, or we're priced correctly in the futures market given demand fundamentals? And number two, does it take a yield cut from USDA to break us out of this current trading range?
Yeah, I think we're trading supply. We're not trading demand. And
Okay.
98 million corn acres at 186 bushels an acre. That's a lot of bushels of corn.
That's a lot of corn.
But like you said, we've got a report here in about a month. And last year, it took the January report to see this big decline in yield. This year, yes, we did get a November production report, but it was a very short runway to get to that report. And the objective yield data, I don't think that they really had the time to do the math that they needed to do. So yes, they were collecting samples through the shutdown. So they pulled samples in October and early November, but the labs, they weren't doing any testing. And I mentioned this before, but where the big jump in yield comes this year is in test weights. We've got ear counts were actually down, populations were down, and a 7 bushel an acre jump in yield year over year, despite lower ear counts and lower populations, means that test weights were through the roof. Last year, we had record test weights. This year, they're anticipating another 4.5% increase. And the labs that test for this test weight were not really open. So they didn't really incorporate that into their math. They changed the ear counts and the populations in this November report, but the grain weight stayed about the same.
Interesting.
And where we saw the decline last year was the same thing. And with the disease that we've seen, with the late, with the poor finish that the crop saw, the late season heat and dryness, I gotta think that test weights are going to come down.
Feels like you're telling me there's a chance, Lane.
I'm hoping. I'm thinking there's got to be. I mean, the demand's there, and if there's any cuts of supply, I think we quickly start trading this demand rather than supply.
Outstanding. Well said. Let's put a lid on it there. A terrific article. You can check it out at profarmer.com. Is USDA's higher corn export estimate warranted? Thanks so much, Lane, for your time this morning, your perspective. Good work, buddy.
Thanks, Davis.
All right. Well, that's going to wrap up the Pro Farmer podcast for today. Thanks to Spencer Langford, of course, to Lane Acree, and Zach Zingula for production support. Thanks for tuning in. It's Davis Michelson for the Pro Farmer podcast.
Thanks for joining us. We'll return next week with another episode of the Pro Farmer Podcast. And remember, everything talked about today is updated throughout the week on profarmer.com and in this Friday's Pro Farmer newsletter.